Hello there. I'm Amira David. This is Boom Bust. These are the stories we are tracking for you today. Donald Trump becomes the U.S. president-elect in a stunning victory. I've got the details on how markets are reacting around the world coming right up. Then we will go live to Canada to find out what Trump's win could mean for the North American Free Trade Agreement. Is it now in jeopardy of falling apart? That's straight ahead. Plus, Ed Harrison is on set with me for more analysis on this riveting election. Why didn't the world see this coming? And why are markets now defying expectations? That and more lined up for you on today's show. Don't go anywhere. Our Boom Bust post-election edition all starts right now. Well, Donald Trump is often described as a billionaire businessman, but now he can add one more title to his name, President-elect. Early this morning, Donald Trump was elected as the 45th president of the United States in a victory that left millions of onlookers around the world stunned. The surprise outcome defied late polls showing Secretary Hillary Clinton with a modest yet consistent lead, and it's clear it's not the outcome she was expecting.
This is not the outcome we wanted or we worked so hard for, and I'm sorry that we did not win this election for the values we share and the vision we hold for our country.
Meanwhile, Trump also spoke about unity as he struck a more gracious and tempered tone than expected.
Now it's time for America to bind the wounds of division. We have to get together. To all Republicans and Democrats and independents across this nation, I say it is time for us to come together as one united people. It's time. I pledge to every citizen of our land that I will be president for all Americans, and this is so important to me.
Well, no surprise that markets around the world have been reacting heavily to the news, initially not very kindly. Late last night, the Dow took a tumble with futures falling more than 700 points. But within a couple of hours of the open on Wednesday, stocks had not only clawed back all of their losses, they also made significant gains. In fact, the Dow ultimately ended the day near its all-time closing high. The Mexican peso, however, didn't quite see the same rebound. That currency plunging by more than 13% to an all-time low against the dollar, though it did recoup some of those losses on Wednesday. Now, we also saw a major sell-off in bonds that sent prices tumbling, driving the 10-year Treasury note up by about 2% late on Tuesday. Lots of questions going forward about what the markets are signaling and what it all means for the Fed. Lucky for you, Ed Harrison and I will discuss all of that in today's Big Deal. Well, Canadian Prime Minister Justin Trudeau has congratulated President-elect Donald Trump on his victory. Trudeau, like many Canadians, was critical of Trump during the run-up of this election and is now concerned about the many uncertainties that face Canada as the new leader steps in here at home. RT's Alex Mihailovich joins us in Toronto for more on this. Alex, we see that the Canadian dollar had a bit of a wild ride last night. What can you tell us about that?
Interesting. The Canadian dollar went down, a $1.27 drop, which is a major drop. That was around midnight when we saw Donald Trump get into the lead, and things were pretty clear that he was going to become president or president-elect sooner than later in this morning. So I know you were up very late, and so was I watching this. And, it bounced back it bounced back. The Canadian dollar was basically where it was a day ago. So no major difference, as we saw in the markets as well. You know that the markets in the States have performed very well, and so have the Canadian markets. So this doom and gloom message that was out, well, it kind of just dissipated and went away. Gold is up in Canada. Metals are up. Things are looking good in the markets. And I think maybe this could have been because of what happened during Brexit. We saw that the earth did not collapse there. It took a bit more of a hit, it took a little bit more time for the markets to recover, but in the end, everything is fine and dandy. So maybe lesson learned, so we didn't have to go through that trouble and wait weeks or months. Instead, we had a little bump in the road that lasted overnight, and now everything's fine again.
Yeah, exactly. I think Wall Street is a lot more calm than everyone expected at this point. Now, the North American Free Trade Agreement, NAFTA, is something that Trump has mentioned time and time again on the campaign trail. It's something that he said he would revisit. Now, it's unclear what that revisit means. I mean, what can you tell us about that, or what we can expect going forward?
What many Americans don't understand is the Canadian and American economies are completely intertwined, especially looking from a Canadian perspective. 72% of our exports of goods and services go to the U.S., so we're very heavily reliant on America itself. 2.5 billion jobs here are directly attached to the U.S. economy. So NAFTA, as it stands, is an important agreement for Canada, and of course for Mexico, we know that as well. But for the States, you know, what Trump is saying is basically he wants to bring back jobs into the country. He wants to put America first. And that's not necessarily something that is a negative for Canada, because the fact of the matter remains that we did business prior to NAFTA as well. So why can't we do it in a post-NAFTA world if that's actually what happens? This deal is not something that every Canadian likes either. And so it's really something that you have to look at from various perspectives. It's not necessarily, again, for Canada, it's not going to be a doomsday scenario. So NAFTA revisited, you know what, maybe it's something that we should have done a long time ago. And in the end, everybody might benefit from that.
Yeah, well, pro-trade folks are perhaps a little somber, but as I understand, it's the Canadian oil and gas folks that are pretty excited, actually, about this Trump win. What do you know?
You know what, oil and gas sector, well, Trump said a while ago that that Keystone pipeline that Obama basically quashed, that might be brought back to life. And especially when you have Republicans in the Senate as well, in the House, you have the perfect storm right now to bring Keystone XL, that massive pipeline that will be bringing down crude from Canada down into the States, to bring that back to life and to get that signed on board. Now, you know, of course, there's a lot of debate about that from an environmental perspective. The oil companies will tell you it's great because they don't have to send oil down on trains anymore, which is more dangerous than pipelines. But of course, the environmentalists will tell you the exact opposite, that amount of fuel, it just adds to the global warming problem. Now, as exciting as it is for oil companies, because they're thinking that Trump is going to give them a thumbs up to sell more oil and more gas here from Canada, you have to remember that Justin Trudeau is a guy who, on his back, he sees a very important thing, that he is a climate change crusader, that he wants to make a difference in this world, and he wants to be one of the top dogs when it comes to stopping this global warming process that we're going through. So there might be friction there. Well, I don't know how that's going to play out. I don't think anybody can really predict that. But right now, for oil and gas companies, they're thinking, you know, Trump is at least on their side.
Yeah, for sure. And Alex, let me ask you, just because you live in Canada, anecdotally, I'm sure you've spoken to a lot of friends and family over there to get their general sense about, you know, what this really means. I mean, what are you feeling about a Trump presidency?
You know, I think Canadians probably feel pretty much what Americans feel as well. You have, it runs the gamut. I've heard things on Facebook today that people were crying in their shower. They're like, oh my gosh, the world is, you know, imploding. On the other hand, you know, Canada, we were very tight with the whole idea of having Bernie Sanders as president. So a little bit of schadenfreude here, you know, a little bit of payback maybe. Even the Bernie Sanders supporters that I talk to are like Bernie Sanders supporters in the States, many of them, are thinking, you know what? The DNC and Clinton really did a job on Bernie. So, hey, this is a little bit of payback here. And, you know, Donald Trump, it might work out pretty well. We don't know that. We don't know what this guy's going to do. And after that speech last night, things seem a little bit better than they did just a day ago.
Yeah, it has left a lot of people wondering if Bernie Sanders in the race with Trump would have made for a more interesting matchup. All right, RT correspondent Alex Mihailovich joining us from Toronto. Thank you so much for that. Okay, still ahead here on Boom Bust, we've got a new president. So what does that mean for the Fed's decision to hike in December? Investment manager Lenore Hawkins weighs in. Plus, Ed Harrison joins me on set to break down the Trump upset and why the world just did not see this coming. We will discuss on the other side. Stay with us. And as we go to break, here are the numbers at the closing bell.
I'm a trial lawyer. I've spent countless hours pouring through documents that tell the story about the ugliest side of corporate America. Corporate media refuses to talk about these issues.
The conduct by this company was deplorable.
I'm going to paint a clear picture about how disturbing, how corrupt corporate conduct has become in modern America. These are stories that no one else can tell. I'm Mike Papantonio, host of America's Lawyer. Question more.
What'd you have for breakfast yesterday? Why would you pick those shoes? How fast is your Wi-Fi? What's your dog's name? Why'd you name him that? What's your biggest fear in life? Ever been on a hayride? When's the last time you read a book? What would you say if you ever met the Pope? Who's the best quarterback of all time? What's one topping that doesn't belong on a pizza? Now, I've interviewed you too. Question more.
Well, U.S. elections are finally over, so now it's time to handicap post-election economic scenarios. But that's kind of hard to do since markets have whipsawed violently since the results came in. To discuss these issues, Lenore Hawkins is on the show. Lenore is a founding partner at Meritus Advisors and also co-author of the book Cocktail Investing. I asked Lenore if she was surprised over the election's outcome and that markets actually opened up as a result of a Trump win when the conventional wisdom had them down. Here's what she had to say.
Well, given that we had the Brexit vote and then we had the Cubs win the World Series, I guess we shouldn't have been surprised to see Trump win. And now we have a billionaire moving into public housing. So I suppose it was already in the books that this was going to happen. It is interesting to watch how the markets are handling this. There's so much volatility, and I think it goes to the heart of the level of uncertainty. You know, we first had the futures plunging so much that we had to put stops in, and now they've turned around and are going up. And I think that really just says no one knows, because Trump's policies have been rather unclear, to put it mildly. And we're not really sure what the difference is going to be between candidate Trump and President Trump. You know, we all know that candidates are always, they tend to say things that they don't always follow through with when they actually get the office. But with Trump, we have nothing to go on, so it makes it a lot more difficult to know exactly what he'll do.
Yeah, that's a good point. There's so much uncertainty, and a lot of that we will figure out, you know, within the first 100 days, obviously, of his presidency. But tell me, I mean, where do you think this leaves the Fed?
I think the Fed, Janet Yellen has got to be really frustrated right now. I mean, he's been very vocal about the Fed being problematic and being entirely too political in his mind. Yellen has got, her term doesn't end until January of 2018, so she's got a little over another year. I think it does call into question the probability of a rate hike, and we've already seen the Fed fund futures are indicating that that probability is going down. And the Fed's definitely going to be watching what's happening in the markets and what's happening particularly with capital investment to see if maybe a hike isn't warranted at this point, because things have gotten that much more unstable. And they actually, in their last statement, they did already shift their wording around a little bit. the previous statement from the month before, they had mentioned that both the that household spending, so consumer spending, and businesses looked pretty strong. This last time around, they changed that wording to say that it doesn't look as good as they would like to see. So they may have already been paving the way for not hiking in December.
Yeah, so you really don't think December is necessarily baked in the cake. Let me go back to the election results, because what I found really fascinating, and I think speaks volumes, is the fact that Trump was able to turn states like Michigan and Pennsylvania, states that traditionally go to the Democratic candidate. I mean, what do you think that really says about the state of the economy in those particular areas right now?
I think Americans are sick and tired of hearing that things are great and the economy is going well and all the promises are being fulfilled when those on Main Street are seeing that that's not the case. And on top of it, they were told that they're going to get this wonderful healthcare system and that's going to solve the healthcare problem in the United States, and it's done the reverse. I mean, I think Bill Clinton said it pretty well when he said this thing is a disaster. We've got premiums, and those premium hike did not come at a worse time for Hillary. You have the premiums going up and up and up while coverage keeps going down. But I don't see how that was going to be any other way, given that we were introducing a bunch of new people into the healthcare system. So more demand without improving the supply, and the demand, the people coming into the system were people that were going to have a higher demand for healthcare. So they weren't even an average healthcare consumer. Of course the system was going to get strained.
Yeah. And the other thing I found interesting is that this morning we learned that GM announced it was laying off workers in Michigan and Ohio. I mean, two of the states, again, that went to Trump. It comes, though, against a backdrop of a bullish jobs report that had unemployment at 4.9%, 160,000 some jobs added. And then, of course, there's the last GDP report with a growth of 2.9%. What does that tell you? I mean, how do you really, parse out what that means? Does it mean that those good economic indicators are lagging?
Well, first off, like you said, the jobs are actually more of a coincident indicator, so it doesn't really tell you where we're going. But if you dig into the details of the jobs report, what we're seeing is that higher paying jobs are being replaced with lower paying jobs. So if you just look at the top line number, it seems okay, but it's not the same thing when you left an engineering job and you ended up getting a job as a waitress. That's not quite the same job. And on top of that, what we're seeing with wages and income is that those are relatively stagnant. If you look at just the private sector weekly earnings, those are barely keeping up with inflation. And one of the other things that I look at is the Treasury receipts. So I look at what the IRS is actually getting from withholdings of wages, and that as well is barely keeping up with inflation. So the story that things are going so well with jobs isn't really the full bit. And with regards to the GDP for the third quarter, a big chunk of that was actually an increase in exports because, of all things, South America had a bit of a soybean crisis. So we had a huge jump in exports. We also had a jump up in inventories. That's not the kind of jump that you see repeated. And we've also seen a big increase, again, in healthcare. If you strip those things out, it was less than 2% growth.
Yeah, it is clear that people are just not feeling those good numbers, or those seemingly, good numbers just off the bat of looking at it. They're not feeling it in the real economy. So something is not measuring up. So tell me, how does one really invest against the scenario that we find ourselves in?
I think the first thing to do is just wait for a little bit, because right after this, we're going to have a period we're not going to know what's really going to happen. And I think we're going to see a lot of volatility. Just today, to see nearly 1,000-point swings, that's just unheard of. And I wouldn't be surprised to see that kind of volatility continuing going forward. What we do know, kind of a bigger picture, is that, say, green energy is going to have a really tough time. Clinton was a big proponent of it, and with everyone assuming that Clinton was going to get it, the green energy companies were doing well. Trump has been very vocal about not being a fan of green energy. He's been more of a fan of the traditional fossil fuels. That's not really going to help them so much, because right now it's not like we're exactly constrained with respect to price on fossil fuels, but going forward, those companies that, say, help build pipelines will probably do much, much better. We're also looking at biotech, the biopharmaceuticals. They were getting just killed between Hillary's tweets and Sanders' tweets. That was a very tough time for them. we're most likely going to see some sort of a repeal of the Affordable or Not So Affordable Care Act. With that, hospitals are going to have a tougher time because hospitals were benefiting from the ACA, but pharmaceuticals were getting hit hard. So you'll see a reverse there as well. Those infrastructure, again, Trump said, as campaign Trump, that he was going to spend twice what Hillary was intending to spend on infrastructure. So that puts us a little over $500 billion in the next 5 years that he's saying he's going to spend on infrastructure. So companies like Caterpillar would do pretty well. The overall picture, though, that's a little bit more concerning is trade.
Yeah.
He's been very against free trade, saying that he's going to renegotiate NAFTA, that he wants to pull out of the World Trade Organization. I mean, these are things that would be a big headwind to economic growth. But then on the flip side, he says he wants to cut corporate and individual income taxes. So that would be a boon to the economy, whereas cutting free trade would definitely be more of a challenge. And that cutting free trade is also going to be a headwind to global financials because banks are already struggling, particularly in Europe, with a global economy that's struggling to grow fast enough to support all those loans. So you have all these non-performing loans. If we get a trade war going, then that's going to make that even more difficult. But right now, which way is that going to go? Which of those factors is going to win? It's impossible to say at the moment.
It's big deal time. I'm sitting here with Ed Harrison, and we are recapping what happened just earlier today. Businessman Donald Trump becoming the president-elect, something no one saw coming. It really was a stunning victory, Ed, and you and I were here in the RT studios late last night, basically just trying to analyze what happened, what really went wrong for Hillary Clinton and her camp. But tell us, I mean, you've been reflecting on this a lot today. I mean, how did we not see this coming?
I think the reason that we didn't see this coming is because there was a bias, a skew to polling data, to media reports, et cetera. And that skew, that polling data anchored us. I mean, I know it certainly anchored me at certain things. Now, I didn't think per se that based upon some of the things, the conversations I've had with people who didn't live inside the Beltway, who lived in real America, that Clinton was really going to tear it up the way that people said. But I was still anchored to a certain degree by the numbers that the polls were coming in at. And ultimately, I think that that's the sort of thing that led people to give 150-to-1 odds on Trump for bet makers in the UK. I mean, Brexit had 5-to-1 odds. This had 150-to-1 odds. The closest thing is Leicester City winning the premiership in English football, because that was, you know, something that no one ever thought of. That would had more odds than the Trump presidency.
Yeah, and what's interesting is, you know, people in Europe, they went to sleep last night thinking, we're probably going to wake up and it's going to be President Clinton. Of course, that didn't happen. And it really kind of takes me back to Brexit, to that Thursday evening. I went to sleep over here in the U.S. thinking they're probably going to stay within the EU, and I woke up and I was very, very wrong. So I have to ask you, I asked you this last night on set. I asked you, can you draw a fair parallel to Brexit? At that time, you were a little bit more not convinced on that point, but here we are today with Trump as the winner. Can we draw a strong parallel Brexit?
I would say the same thing I said before, which is that it's not like Brexit because the differential is larger. And I think that, you know, now that I've seen the data on the bookmakers, I see that that's the case. 5-to-1 versus 150-to-1, a 30-time spread in terms of the probability that it happens. So I'd say that it's not like Brexit in the sense that, one, it's a bigger event in terms of the unlikelihood of it happening, and secondly, it's bigger in terms of the United States versus the UK. Those are two completely different scenarios. The UK is a much smaller economic agent than the U.S. is.
But the channeling of the anti-establishment sentiment, that's very
Definitely,
similar.
without a doubt.
Okay, let's move on to markets because they've been on a wild ride. Pre-trading, they were dropping, opening within a couple of hours. I reported this earlier. They were up. I mean, stocks are doing extremely well.
250 on the Dow plus a day.
There you have it. Bonds selling off. This is not what you normally see, you know, when you think of volatility post a Trump win. Why the turnaround?
Yeah, so let me say, first of all, you know, what I was saying yesterday, and I think it's still true, I said that really you're going to want to play the real economy. What happens over the short term in this is really, you know, a positioning rally. That means that people are going to knee-jerk it, and then you can get in and position for the longer term. That's definitely true, but the pullback to the longer term happened overnight in a much more aggressive way than we would have thought. And when you look at Brexit, it took it 2 months before people started to believe the data that actually Brexit wasn't the end of the world. Here, it happened literally within the day. And the reason was two things. One, the acceptance speech by Donald Trump, where he basically was much more presidential than people expected, and he was also conciliatory. He reached out to the Republicans who didn't back him. He said very positive things about Hillary Clinton.
Yeah.
Then later we also got the exact same thing from Clinton.
Mm-hmm.
She said something about the transition and how we do transitions in America. Even Obama in a third speech said very positive things about the transition to Trump.
Everything was really calming.
Exactly. And I think that that is ultimately, and when you look at the numbers, it's actually during the Clinton speech that we saw that we had a clear uptick in the Dow. And the same thing, by the way, is true with regard to bonds. Bonds are up, or rather, bond yields are up, is because they think that the things that Trump said are bullish for the economy. All of the heavy lifting is off of the Fed, and now some of it's going to go on to fiscal policy under President Trump.
Yeah, I think you make a really good point that both candidates, or now the President-elect Trump, and Hillary Clinton said exactly what the markets wanted to hear, to feel that things were going to be, you know, chill or stable, if you will. You mentioned the Fed. I mean, what do you think the Fed is going to do?
I think that now that we've seen what the real scenario is, that is that it's not going to be the disaster people thought. They're going to go back to the status quo, which in their case, as I was saying with Peter Schiff yesterday, is I think that they want to hike interest rates. And so we're back to the Fed pulling the trigger on 25 basis points. Really, you know, we could have gotten there anyway, you know, because we have a month until this happens. It's going to be in December. But nonetheless, now we know that it's much more likely to happen. All
right, Ed Harrison, much more analysis to come on this, like I said, riveting election. Ed Harrison, thank you. That's all from us. We love hearing from you guys. Tweet at us, Edward NH, Bianca Fascini, Amira David. Remember, you can see all the segments featured in today's show on YouTube, youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks for watching. We will see you next time.